Y'all ready for this? Let's go.
Welcome back to the Ben James Smith podcast. In the last episode, we talked about the UK rental crisis and why it's not a short-term issue, but a structural imbalance between supply and demand. Today, I want to build on that, because when structural imbalances exist in markets, something very predictable happens. Institutional capital begins to move, and over the past few years, we've seen a clear trend. Large-scale investors, pension funds, private equity, asset managers are increasingly allocating capital into UK residential property. So the question is why? Because these are not reactive investors. They don't chase headlines. They position early and they stay for a long time. Part 1. Institutions don't chase. Yield, they chase stability. There's a common misconception that large investors simply chase the highest returns. They don't. They chase predictability because their job is not to maximize upside in any single year. Their job is to preserve and grow capital over decades, so they look for assets that provide consistent income, low volatility, structural demand, and residential property increasingly fits that profile, not because it's exciting, but because it's dependable. Part 2. The shift toward income-based assets. Historically, property investment was often focused on capital appreciation. Buy an asset, wait for prices to rise, sell for profit. But institutional thinking has shifted. The focus is now on income, recurring, predictable cash flow, and residential property, particularly rental housing, delivers exactly that. Monthly income, high occupancy rates, broad tenant demand. It behaves less like a speculative asset and more like infrastructure, similar to utilities, similar to transport, and that's how large investors increasingly view it. Part 3. The supply-demand imbalance. As we discussed in the last episode, the UK has a structural shortage of housing. Demand continues to grow, supply struggles to keep up. This creates something very valuable from an investment perspective: visibility. If you can reasonably predict that demand will remain strong for years, the income becomes more reliable, and reliable income allows capital to scale. Because uncertainty is reduced. This is why institutional investors are not just entering the market, they are building long-term positions. Part 4. Professionalization of the rental market. Another key factor is a shift from fragmented ownership to professional management. Historically, the UK rental market has been dominated by individual landlords, small portfolios, inconsistent management, variable standards. But that is changing. Institutional capital brings standardized operations, professional management, long-term ownership models. This creates a more consistent tenant experience, but it also creates a more investable asset class because standardization reduces operational risk, and reduced risk attracts more capital. Part 5. Why timing matters. Institutional investors don't wait for perfect conditions. They position during uncertainty because that's when competition is lower. Right now, we are in a period where interest rates are still elevated. Sentiment is cautious, developers are slowing activity, but underlying demand remains strong. This creates an entry window, not for aggressive expansion, but for disciplined positioning, and that's exactly what institutional capital tends to do. Part 6. The long-term view. Perhaps the most important difference between institutional and retail investors is time horizon. Retail investors often think in years. Institutions think in decades. They are not asking what happens to prices next year. They are asking, what does this market look like in 10, 15, 20 years? And when they look at the UK residential market, they see population growth, housing shortages, strong legal frameworks, high demand for rental accommodation. From that perspective, the direction becomes clear. So when you see institutional capital moving into UK residential property, it's not a trend, it's a signal that the asset class is evolving from fragmented and opportunistic to structured and strategic. And once capital of that scale commits to a sector, it tends not to leave. It builds, it expands, and it reshapes the market over time. Thanks for listening, and remember, institutional capital doesn't follow opportunity, it follows durability. I'll see you in the next episode.